ICOs, initial coin offerings. Initial coin offerings, ICOs, have taken the world by storm in recent years. They have emerged as a popular method of fundraising for blockchain-based projects. With ICOs, investors receive tokens which they can later trade for cryptocurrencies like Bitcoin and Ethereum. The unique nature of ICOs has attracted a lot of attention from investors and entrepreneurs alike. However, as with any emerging market, there are risks involved. In this video, we will explore what ICOs are, how they work, and what you need to know before investing. From understanding the technology behind ICOs to navigating the complex legal landscape, this video will provide a comprehensive guide to the world of ICOs. So, whether you are a seasoned investor or a curious newcomer, read on to learn more about this exciting new development in the world of cryptocurrency. 1. Introduction to ICOs, definition and purpose. In today's ever-evolving digital landscape, there is a new phenomenon that has been grabbing headlines and captivating the attention of investors and entrepreneurs alike: initial coin offerings, ICOs. But what exactly are ICOs, and what is their purpose? An ICO, also known as a token sale or crowd sale, is a fundraising mechanism used by startups and organizations to raise capital for their projects or ventures. Unlike traditional fundraising methods such as venture capital or IPOs, ICOs leverage the power of blockchain technology to issue digital tokens or coins to investors in exchange for funding. These digital tokens, often built on existing blockchain platforms like Ethereum, serve a dual purpose. Firstly, they act as a form of investment, giving investors the opportunity to buy tokens at a discounted rate before they are listed on exchanges. This potential for high returns has attracted a surge of interest from both seasoned investors and individuals looking to participate in this new wave of digital investment. Secondly, these tokens often have a utility within the ecosystem or project being developed. For example, they may grant access to specific services, act as a medium of exchange, or represent ownership in a particular asset. This utility factor adds value to the tokens and creates an incentive for investors to participate in the ICO. The primary purpose of an ICO is to raise funds to support the development and growth of the project. By selling tokens to investors, startups can secure the necessary capital to build their platforms, develop new technologies, or expand their operations. This decentralized fundraising model offers a unique opportunity for both small and large-scale investors to participate in early-stage projects that have the potential to disrupt traditional industries and drive innovation. Point 2. Understanding the differences. ICOs versus traditional fundraising. When it comes to fundraising, the landscape has evolved significantly in recent years, with the rise of initial coin offerings, ICOs, making a splash in the world of finance. Understanding the differences between ICOs and traditional fundraising methods is crucial for anyone looking to navigate this new and exciting territory. Traditional fundraising typically involves seeking investment from venture capitalists, angel investors, or through public offerings. This process often requires a lengthy and rigorous due diligence process, with potential investors scrutinizing a company's financials, business model, and growth potential before committing any funds. On the other hand, ICOs offer a more decentralized and open approach to fundraising. Instead of seeking investment from a small group of select individuals or institutions, ICOs allow companies to raise funds from a global pool of investors by issuing digital tokens or coins. These tokens are typically built on blockchain technology and represent a stake or utility in the project. One key difference between ICOs and traditional fundraising is the level of regulation. While traditional fundraising methods are subject to strict regulatory frameworks, ICOs have operated in a relatively unregulated space. This has its pros and cons. While it allows for greater accessibility and democratization of investment opportunities, it also opens the door to potential scams and fraudulent activities. Point 3. The advantages of ICOs for startups and investors. ICOs, or initial coin offerings, have gained significant popularity in recent years as a new method of fundraising for startups and a unique investment opportunity for individuals. This section will delve into the advantages that ICOs bring to both startups and investors, shedding light on why this innovative approach has captured the attention of the business world. For startups, ICOs offer several key advantages. Firstly, they provide a platform for startups to bypass traditional fundraising methods, such as venture capital or bank loans, which can be challenging to secure, especially for early-stage companies. By launching an ICO, Startups can directly raise funds from a wide range of investors, no matter their location or background. This opens up a global pool of potential supporters and backers, fueling the growth of the business. Additionally, ICOs allow startups to tap into the power of blockchain technology. By issuing tokens through an ICO, startups can leverage the transparency, security, and efficiency that blockchain offers. These tokens can represent various assets, such as equity, utility, or even access to specific services or products. This versatility provides startups with the flexibility to design their ICO to align with their unique business model and goals. From an investor's perspective, ICOs present an exciting opportunity to participate in the early stages of potentially groundbreaking projects. Unlike traditional investments, where early-stage opportunities are usually limited to accredited investors, ICOs often have lower entry barriers, enabling a broader range of individuals to participate. This democratization of investment opportunities allows retail investors to access projects that were previously exclusive to a select few. 4. The potential risks and challenges of participating in ICOs. Participating in initial coin offerings, ICOs, can be an exciting and potentially lucrative endeavor. However, it is crucial to be aware of the potential risks and challenges that come along with it. One of the main risks associated with ICOs is the lack of regulation and oversight. Unlike traditional investment avenues such as stocks or bonds, ICOs are not subject to the same level of scrutiny by regulatory bodies. This means that investors may face a higher risk of fraud or scams. It is essential to thoroughly research and vet the ICO project and the team behind it before committing any funds. Another challenge is the volatility and uncertainty surrounding the cryptocurrency market. The value of tokens purchased during an ICO can fluctuate dramatically, sometimes within a short period. This volatility can result in significant gains, but it can also lead to substantial losses. It is crucial to carefully consider your risk tolerance and investment strategy before participating in an ICO. 5. How to evaluate an ICO. Key factors to consider. When it comes to investing in ICOs, initial coin offerings, it's crucial to thoroughly evaluate the project before making any decisions. With the rise of ICOs in recent years, it can be overwhelming to navigate through the myriad of options available. However, by considering some key factors, you can make more informed choices and minimize the risks associated with investing in this emerging market. Firstly, it's essential to scrutinize the team behind the ICO. Look for a team with a solid background in the relevant industry and a track record of successful projects. Assess their expertise, experience, and credibility to gauge their ability to execute the proposed project effectively. Next, evaluate the ICO's whitepaper. A well-written and comprehensive whitepaper should clearly outline the project's objectives, technology, use cases, and potential risks. Pay attention to the level of detail provided and the feasibility of the project's implementation. Look for evidence of thorough research, a well-defined roadmap, and a realistic timeline. Another crucial factor to consider is the ICO's community engagement and transparency. Check for an active and engaged community, as this indicates a strong interest in the project. Transparency is also vital, so ensure that the ICO provides regular updates on its progress, communicates openly with investors, and has a clear plan for funds allocation. Additionally, conducting due diligence on the ICO's financials is imperative. Scrutinize the project's funding structure, token distribution, and the team's financial management plan. Assess whether the ICO has a clear revenue model and a sustainable business strategy, as these factors are essential for long-term success. We hope you found our video on the rise of ICOs informative and insightful. As the popularity of ICOs continues to grow, it's important to stay informed about this evolving trend. By understanding the basics of ICOs, their potential benefits, and the associated risks, you can make more informed decisions when it comes to investing in these digital assets. Whether you're an investor or simply curious about the world of cryptocurrencies, we hope this video has provided you with the knowledge you need to navigate the exciting world of ICOs. Stay informed and may your investments bring you great success.